versus the yen is just very, very surprising for this currency cross, let alone the fact that that's just what's going on in the lieu of some other major currencies where we're not seeing any type of divergence like that. So it's just a very interesting thing. So as far as being a bear with the yen, like we had a nice sell-off on Monday, all of a sudden, there you go. It was over, and even though the dollar index had been trading lower for a few days, the yen has basically been on pause for the last 2 days, and well, now we're starting the new session. The Japanese markets are now open, and as you can see, very tight range so far. For today, so let's go look at the Australian dollar, U.S. dollar, real quick, and see what happened there and what they are doing now. So it's quiet in Japan. Let's see how quiet it is in Australia. And let's see, it is now pulling up the chart. Things are running a little, I forgot to shut something else off, so it's running a little slow with the stream. Okay, Australian dollar, U.S. dollar, we had a very, basically unchanged today. It's just slightly lower. Had a really nice rally to start the week off. Today, range is still kind of tight. So I would be very leery of being a bear here. So it's been in a slide for the past month. I know it's in a, right now it looks like it's just in a bullish correction. And it very may well be just a bullish correction. However, like I said, I would be very cautious, especially if the dollar index continues to go lower. It's most likely that this Australian dollar, U.S. dollar may get still yet a little bit more relief and get a little bit of a lift up towards the upside. Now, I'm not overly bullish either here. I could just see us maybe taking out the current highs, then kind of running out of gas here around this 69-cent level. I mean, you can see how I'll put in the horizontal line here. If we put it in at 69 cents, you can see how this could be an area where it's going to run into trouble. And also, if we just have a couple more days of beating up the dollar, that would give us a chance to pop it up there. Then the dollar gets a nice little turn back to the other side, getting strong, and then we see maybe another break, setting up for some very wide range trade possibilities here. Now, something that is not acting the same as the U.S. dollar, or excuse me, the Australian dollar, U.S. dollar, is the New Zealand dollar, U.S. dollar. This market took off just like the pound. Wow, it was pretty interesting to see that of all the currency crosses that had been strong against the dollar and obviously pushing the dollar index into negative territory over the past few sessions, the New Zealand dollar, just like the pound, had a very nice upside breakout. Now, when the screen pulls up, there we go. So as you can see, wow, it's even pushing it even now as we talk. That's pretty amazing. This is very strong. So today it made a new high, still settled positive, but it looked like it was running out of gas. And then it opened up. The Asian markets are up, and this is strong. So this is a good indication here that this is also another market that's been in a bull market for a while. This started back in October. So this is a very strong trend. Now, could it get a correction? Absolutely. But right now, this had a nice breakout because we were looking at a possible head and shoulders formation here. Let me show you what I mean. If you look at this as a potential head, and then this here as your shoulder area, with this being a neckline, we could have, I mean, the way it was looking like it might want to start to make a turn towards support. And you'll see this will be all clear once I get this other trend line in here. So as you can see, the uptrend from this low up here it's a fairly decent trend line to maintain as far as an average. When a trend maintains a bull or bearish trend along a slope around this kind of a size, it does tend to bounce off the lines pretty consistent. I mean, not to a perfect tick for a line thing, but they're very close, and then usually you'll see the trend resume. Now here we had looked like a shoulder, a head, and a shoulder forming, and the breakout that I was looking for, especially with this downward sloping resistance, would be that either by attrition it would go sideways and run out of gas and then start to fall lower, especially once it would get through this upward sloping resistance line. However, that wasn't the case. Instead of going to the downside, it breached this downward sloping resistance line like a balloon underwater and exploded. And this is a nice move for New Zealand dollar, from going from 64 cents to 65 cents in like a heartbeat. on Monday, and then had a nice follow through on Tuesday and Wednesday, and now here we are on Thursday talking with their markets that are only open a couple hours, and look at how strong that is. Now, could it spike? Absolutely, it could, but this is a very good indication right now of how weak the dollar is relative to some of your lesser currency crosses. That's very significant because any move by the bigger currencies, that it just makes it so much more drastic on the dollar index as far as the capability of it getting under more pressure. And like we looked at the chart before, it does look like it has a very good chance of that happening. So now we've looked at, let's see, we went and looked at everything. We went around the world. So let's look at the euro US dollar real quick one more time. This is kind of the market that I think is going to be a little bit tougher to gauge for upside momentum. Like I said, the pound could still have some explosive moves, especially, but right now I think with the election coming up, it's not as likely to occur. Anything can happen though. But for the euro US dollar, remember, like I said earlier in the webinar, that because the average true range has been so tight for now a year in the euro US dollar, that moves like we had that started off the week this week in the euro US dollar look more extreme than they really are. So I mean, when the euro is typically trading, like for instance today it made a higher move high, it hit a range of $1.1116 and a low of $1.1066. So that's a 50-point range fluttering on the high. That's a fairly good range for the euro as of late. But even still, as we're pressing with the dollar index the way it is, it's not. The day before was very tiny, and then today we had a decent range poking the highs, but then settled lower, basically unchanged here on the day. That tells me that this market, even with a weak dollar, can only go so high. It just doesn't. For some reason, there's the euro just keeps getting beaten down. Like if you really look at your fundamentals. In not just that things have to follow a fundamental all the time, but just by your relationships, you would assume that the euro US dollar right now would be at a higher level right now than it is. Even if it was trading neutral to lower, you would think that it would be more up in the like $1.18 to $1.22 category. So I think a lot of it is because of recession fears, and then also they seem to be now the new currency of debt. So there's a big carry trade that's going on with the euro that I think is also kind of keeping it suppressed. So for all of you euro bulls, that's what I'm basically leaning on, is that for upside potential, be careful. Can you have a move like in October that ran up like this? Obviously you can. Could it happen again? Absolutely it could. But if you look at a lot of your ranges that have been going on here, they've either been very tight or they're zigzaggy like this one, where you come down, you slam, you come right back up, you slam, like you're not going anywhere. You're just getting chopped up. So, and directionally, it's very challenged. I think that, like I said, even if you have a falling dollar index and the pound could be rallying, I think the euro US dollar is going to have trouble getting that type of momentum. Even if it is a bull, it's just not going to be as drastic. I don't see it shooting up from like $1.10. Like I said, I think the value right now of the euro should be about $10 higher. I don't think that the market's just going to start screaming up towards that level, and not just because I believe it or whatever. I just don't think it would be possible the way it's trading. And also, I think it's becoming a big carry trade currency with other currency crosses. So, for instance, since we're talking about the euro like this to make it kind of a clear, let's look at the euro British pound. So we know that the pound typically, no matter what, against any currency, has some good volatility and has a lot of market depth. So we know that the pound had an explosive move to the upside with the euro trailing behind it as a bull as well, but just kind of a reluctant, lackluster bull. So with that being said, what do you think happened with the euro pound? So if that's probably the way the momentum is going, that's where the strength and the pound is stronger, the euro pound should be probably lower on the day right now as we're speaking. So we'll see this as it's up. Right now it's loading up this chart. It's almost there. So, and then we will go back to that euro US dollars. Oh, wow, look at as I spoke. It is on its lows, just hanging there. Yep, this thing is a bear. See, now this is where you got a trend. But look at this. Look at these. Look at how tight these ranges were. you just got to be a bear, the euro versus the pound. I mean, this has been going down now this has been going down since August 12th. So since the beginning of August, ironically, when the other currencies turned against the dollar, the euro had already started to gain strength. And then as it was running up and the euro was gaining strength against the dollar, all of a sudden that was when the pound started bouncing again. And this is when they started to get their big rally. And this is shabam. So this downtrend, this is a really tough bear trend. It's a very, very tough one to trade. So if you're a euro pound trader, I feel for you if you're trying to buy into this thing. Don't try and catch a falling knife. I would definitely look for a signal. And right now, I think, like I said, with the pound's so much stronger against the dollar right now, that might be a way of looking at your euro pound trade, is to watch how they trade. And if you see the pound is really excessively leading or looking to lead, especially press higher move highs, then I would say that you're probably be a good bear on the euro pound trade. So that being said, we don't have any real signals from any of the days, any of the charts that we looked at. So we will pull up the euro US dollar one more time just to check out these levels and see what we have going on for the rest of the week. So we know that we have those numbers in the EU, in Germany, and also in the UK. As well as we do have the employment claims number coming out tomorrow in the United States, and then we also have on Friday we have the unemployment number. So that being said, we do have some big economic numbers that could get the market swinging. Even the euro US dollar, get a nice little reaction off of that. So the question is, higher or lower? Well, I think right now you're kind of, like I said, looking for a neutral to, we made a higher move high after a lower move low, so it's really tough. It's a change in trend, but the trend's been sideways now for a month, kind of bearish. So if this is a change in trend, then that would mean that we're probably looking to be neutral to higher. And like I said, with the dollar index being heavy, and even with the pound, but like I said, you saw how the euro is doing against the pound. It's falling down against the pound. So the euro has been in a range trade basically with the US dollar for a year for sure, which has basically been, in a $10 range. And most of it's been in a $5-6 range for the past, 6 months, 7 months. Whereas obviously with the euro US dollar, it's been trending lower. A grind at certain points, but definitely on a trade, if you're a long-term trader on that, boy, you caught a good trend this year, that's for sure, to the downside. So I don't think you're going to have anything like that in the euro US dollar, but key off of this green pivot here to $10.73, and also the high that was set today. Higher move highs are indicative of a bull market, and if we can take out the high here, which would be $1.1117, then there's a good shot that we can be up at this $1.1180 area. So let me give you the little markers here so you can see what I'm talking about. So this old higher move high would be definitely the key breakout area to the upside. And then also today's, or actually now it will be considered yesterday's high, would be your rally point. And here's the thing you also want to look at. Remember I talked about range? You're looking about from $1.1117 up to $1.1182. So you're not looking for very much. You're looking at a 65, just over 60 pip move. But your risk would be what? So if you're at $1.1080, yeah, see your risk is your low. You're almost at a 1-to-1 ratio for the most potential chance of getting up to here, getting a breakout above here that's maintained. I think you'd have to have a really severe sell-off in the dollar and have some big dollar weakness. Now remember, we do have an impeachment trial going on in the United States. How that's going to affect the current president and what's going to happen will be very interesting. Will Donald Trump be able to walk through this with an iron coat and come out shining, or at least surviving and remaining president, or will they be able to do what they've been after for so long? We shall see, but it probably will have the dollar stirring if there is any major news that comes out, especially during this beginning week of the impeachment trials. So, Okay, with that being said, we have no signals. So, but if you'd like to learn about signals, there's a book you can read called High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. And today and tomorrow, there is still our Black Friday sale going on, and you can get 50% off the Kindle version of High Probable Japanese Candlestick Patterns. And if you're a Kindle Unlimited reader, you can just read it anyhow. You don't have to buy the book. And if you read the book, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in Forex, stocks, options, futures, all kinds of markets. If it trades and wiggles and jiggles, you can probably find a candlestick pattern somewhere. The key is, do you know how to use them properly, which most people do not, especially those that always seem to be the naysayers. They always say, like, it doesn't work on this and doesn't work on this. And I always say, you are 100% right. It doesn't, because it wouldn't. So, and then they give you a puzzled look when you're like, you use them, you believe in them, but you don't. That's why you got to read the book. So, and there's also lots of great money management ideas and rules for sure that are not ideas. They're definitely rules that you should live by if you're a trader. And also lots of scenarios on how you can trade different patterns, different currencies, whether you are a Forex trader, or let's say you're an equity trader. How do you trade the currencies when you're without trading currencies? Well, there's ETFs, and there's all kinds of options you can use. There's binary options you can use, and all kinds of other things as well. Also, that would be a pattern, something for what we just ran into with where the market's kind of at a little impasse right now. It would be great to put on option trades, especially because we're heading into some big economic numbers on Friday. So with that being said, we'll talk about those topics and more in our next video. Take care, and always check us out at www.forex-trading-unlocked.com, and check us out on our YouTube videos for our past streams, and subscribe there too, and follow us so you know when they're coming out. Thanks a lot.